Okay, see, now we'll talk about rental income. Okay, now, which all incomes we have completed? Number one, dividend, done. Winnings, done. Amount deducted from employee's salary, done. Interest on securities, done. Then interest on compensation or enhanced compensation, that is also done. Okay, now we are going to talk about rent. We are going to talk about rent. Okay, pay attention. Now, see, there is some 56, 2, and 56 subsection 2 clause 3, and there is 56 subsection 1. Because of these two charging sections, some rent is taxable over here, and because of general charge also, some rent is taxable here. Okay, now what this says, rent of plant, machinery or furniture, if that is not taxable under the head PGBP, then it will be taxable under the head IFRS. Do you remember one example I gave? My camera, which I purchased, gave on rent to one of my friends. Yes or no? So the camera is a plant and machinery only. Yes or no? I gave that camera on rent to my friend. Is it my business to give cameras on rent and on rental income? So where the rent will be taxable? Yes. So that is the rent of plant, machinery, furniture. So if you are not in the business of giving these assets on rent, and still you have given them on rent and you are earning the rental income, then that rental income will be taxable under the head IFRS, because it is not getting taxable under the head PGBP. Have you heard about composite rent? What is composite rent? Rent of two assets coming together. I've already discussed this in income from house property chapter. Rent from what? Building plus plant, machinery or furniture. So if building is given on rent with plant, machinery and furniture, and the rent of these two assets, building as well as plant, machinery, furniture, the rent of these two assets coming together, combined rent, that is known as composite rent. Yes or no? And this composite rent is coming from letting out my building, but I'm letting out the building along with plant, machinery and furniture. So is it the rent only for building? No. Is it the rent only for plant, machinery or furniture? No. It is a combined rent of these two assets, building with plant, machinery and furniture. But this letting, both the lettings are to be inseparable. Inseparable means both the assets cannot be given separately on rent. If one asset is going on rent, another will automatically go on rent. So letting of one asset depends on letting of another. Both the lettings cannot happen separately. See, if both the lettings can happen separately and still they are done together, then that is separable letting. Then that is, so you'll have to separate the rent also. Rent of building will go to house property and rent of plant, machinery, furniture will come to IFRS. Understanding? But if both the lettings cannot be separated, if one asset is going on rent, another will automatically go. So both the lettings are inseparable. I gave you an example of this classroom. If I'm giving this classroom on rent, automatically the furniture, these assets will all go on rent together. Yes or no? So will I get the rent? Yes, but that rent will have rent of classroom as well as the assets. So this is inseparable letting. Now if the lettings are inseparable, then you are not supposed to separate the rent. Then in that case, whatever rent is coming will be taxable under the head IFRS. Composite rent will be taxable under the head IFRS if it is not getting taxable under the head PGBP. So first you will have to try that if my business is to do such type of lettings, Building along with plant machinery, furniture. If my business is to do this type of lettings and on the rental income, then that rent will go to PGBP. But if I cannot charge it under the head PGBP, then the composite rent will be taxable under the head IFOS. Yes or no? Specific charge. Done, sir? Now what if I am earning rent from building only? Rent from building. But this rent I am not earning by letting out the building. If I am earning the rent on letting out the building as an owner, then it will be my house property income. I am earning the rent from subletting. What did I say? Subletting the building as owner? No, I am not the owner of that building. I took that building on rent. So I am a tenant of the building. And further I am subletting that building to someone and earning the rental income. That rental income is not exempt. That is a taxable income. But I cannot charge that income under any of the earlier four heads. Especially I cannot charge under the head house property. Why? Because I am not the owner of that building. So that rent will come to IFOS. Rent from subletting the building. Yes or no? For example, I am earning the rent from what? Vacant or open plot of land. So I am giving on rent what? Land. Only a piece of land is there. Open plot of land, vacant plot of land. That I am giving on rent. Is it my house property? First of all, this rent is not an exempt income. This is a taxable income. Yes or no? And I cannot charge this rent under salary, neither under the head house property, because I am not giving a house property on rent. Yes or no? I am giving land on rent, and land is not a house property. Yes or no? I cannot charge this rent under the head PGBP because my business is not to give such type of land on rent. I cannot charge this under the head capital gains because land is not sold. Understanding? So this rental income, which is my taxable income, which is not exempt anywhere, I cannot charge it under any of the earlier four heads of income, will be taxable under the head IFOS. Because of which charge? General charge. Because of. So if you see any of these rents, what are you going to do? Charge them under the head IFOS. Will you be able to do it? Yes or no? So this is your rental income. Please read this entire part. Come on, do it fast. This part. Visible, no, everyone? This entire thing I have discussed. Done, sir? Everyone? Should I move ahead? Okay. Now, which income you can see here? Come on, tell me. Up to clause 3. We have done all the incomes. Which income you can see now? Any sum, including bonus, if any, received under a keyman insurance policy. If not taxable under the head salary or PGBP, then that will be taxable under the head IFOS, specific charge. Yes or no? So now we'll talk about keyman insurance policy. Come on. The discussion was long due, which we left in salaries also, we left in PGBP also. I told you that I'm going to do that discussion in IFOS. Okay. So see, 56 subsection 2, clause 4. Clause 4. This clause says that any sum received including bonus, if any. Yes or no? So that sum will be with bonus or maybe without bonus. Yes or no? But including bonus, if any, if the total sum is there, that sum is received under a keyman insurance policy. Which policy? So if that sum is not taxable under the head PGBP or under the head income from salary, then that sum will be taxable under the head IFRS. Now for that you have to first understand what is Keyman insurance policy. Yes or no? So Keyman insurance policy is a life insurance policy taken on the life of another person. So if I am taking my life insurance policy, then it is a normal life insurance policy. Yes or no? But if I am taking a life insurance policy for another person, and that another person is an important person, that important person is what? Keyman. For business or profession of the person who is taking the policy. So if I am a person, I am taking the policy for another person, but that another person is an important person or a key man for my business or profession. So if God forbid something happens to him, my business is going to incur huge losses. Hello? I am a company. Can I have managing director? Company will have managing director. Company will have CEO. Company will have CFO. So these are important persons for a company. Company can have a sole selling agent. Yes. Company can have an agent who is giving the valuable clients to the company. So that particular person is very important for my business. If God forbid something happens to him, my business is going to incur huge losses. So at least let me take a life insurance policy on his name. I will take the life insurance policy for him, so that if God forbid something happens to him, at least I recover some amount from the insurance company. To that extent, the business loss will be reduced. So am I taking this policy for the benefit of my business? Yes or no? That if God forbid something happens to that important person in my business is going to incur huge losses. Out of those losses, at least to some extent, the loss will be recovered through insurance claim, which I will receive from this Keyman insurance policy. So who will receive the Keyman insurance policy amount? The person who has taken the policy on the name of another person who is a Keyman. For example, X Limited is a company. Who is a company? So X Limited is taking the life insurance policy for one person, Mr. Y. One person, Mr. Y is a person who is very important person, who is a key man for the business of X Limited. Now X Limited will give the insurance premium. Who is taking the policy? So X Limited is taking this policy for the benefit of the business. It is taken in the interest of the business. That if God forbid something happens to that Mr. Y, who is very important for the business of X Limited, the company X Limited is going to incur losses. Huge losses will happen. But at least to the extent of some amount, the loss will be recovered through insurance claim, which X Limited will receive from insurance company. Getting my point? Hello? So that way, the amount which X Limited will receive, from the insurance company, from this Keyman insurance policy, for X Limited it will be PGBP income. Because the amount is received in the course of business or profession. So in the course of business or profession, the policy was taken for the key man of the business or profession, yes or no? And if something happens in the course of business or profession, the amount is received from the insurance company by the company X Limited. So if the person who has taken the policy, in his hands the amount is coming, then that amount will be PGBP income. Which income? PGBP income of X Limited. PGBP income of, because X Limited is going to get that amount. Yes or no? What if the policy matures? Amount will come to X Limited. What if something happens to Mr. Y? Amount will come to X Limited. So for X Limited, if the amount is coming, then that amount will be PGBP income in the hands of, because the amount is received including bonus, amount is received under Keyman insurance policy, and that amount is received by the person who has taken that policy. Understanding? Sure, sir. Now, can this policy be endorsed on the name of, assigned on the name of Keyman? Yes. X Limited will tell Mr. Y that, see, I have taken your policy, 5 crore rupees for the next 5 years. If God forbid something happens to you, insurance company is going to pay me 5 crores, including bonus. And after the 5 years, the policy will mature, insurance company is going to pay me 5 crores as a maturity amount. So if nothing happens to you within 5 years, I am going to get 5 crores, including bonus, yes or no? Bonus will also be given. For example, 5 crore, 10 lakhs. Including bonus also the amount might come. Or if God forbid something happens to you within these 5 years, I am going to get amount from the insurance company. So X Limited will intimate the Keyman that Keyman, I have taken one policy on your name because you are a very important person for my business. Yes or no? So I have taken a policy of how much? 5 crores. For how much time? 5 years. If within 5 years something happens to you, I am going to get the money. X Limited is going to get the money from insurance company. If nothing happens to you and you survive, then after 5 years, I am going to get maturity amount from the insurance company. You want to receive this 5 crores from the insurance company? Hello, Keyman. Instead of me, do you want to receive this 5 crores from the company? So I will assign the policy on your name, provided you promise that you will take care of yourself. You will do these things for the business. So X Limited will put some conditions. Promise that you are not going to leave me for next 5 years. Yes or no? So some conditions I will put, and if you will satisfy my conditions, if you will make me happy, then I am very much ready to assign this policy on your name. So what if X Limited has assigned the policy on the name of Y? Keyman. Now, on the maturity, the amount will come to Mr. Y from the Keyman insurance policy. Now the amount will not be given to X Limited. Now the amount will be given to Keyman. Now the amount will be given to, or Keyman can surrender that policy and get that amount. Keyman can surrender the policy and get the amount, or on maturity the Keyman will get the amount. That amount in the hands of that Keyman will be taxable as income from salary, profits in lieu of salary if the Keyman is my employee. So instead of giving you salary, this profit was given. Profit in lieu of salary. If the amount is received by the Keyman, and Keyman happens to be my employee. What if Keyman was my agent? Can I still assign the policy on his name? Yes. That agent is bringing very much valuable clients to the company. So agent, you are very, because out of all my client portfolio, 80% of the client are brought by you only. You are a very important person for me. So I have taken a policy on your name. So I will assign this policy on your name, provided you promise me something. So I have taken few promises, and I will assign the policy on the name of my Keyman, who is not my employee now, who is my agent. Now can I say, he will surrender the policy, or the policy will mature and he will get the money on surrender or maturity of the policy? Now that amount cannot be taxable in his hands under the head salary, because he is not my, then that amount will come under the head IFOS in the hands of Mr. Y. Y will say that it is my IFOS income, because that amount is not received by me. If it would have been received by me, would have been PGBP. If it would have been received by him in the form of employee, as an employee, then it would have been salary. But is he receiving that amount? Am I receiving the amount? No. So cannot be PGBP. Is he receiving the amount? Yes. But is he receiving as an employee? No. So that amount cannot be salary also. That amount will be IFOS. But what if the policy was assigned on his name? He did not surrender the policy, but before the maturity of the policy, he died. Possible. But since the policy was assigned on his name, now his legal heirs will get the money. I will not get the money because I have assigned the policy. Yes or no? If I would not have assigned the policy, then the money would have been received by me. But since I have assigned the policy on the name of my keyman, keyman can be employee, keyman cannot be employee. Yes or no? And what if the keyman dies? So on his death, now the policy amount will not come to me, it will go to his legal heirs, nominees. Yes or no? In that case, for the nominees also the amount will be taxable under the head IFOS. Because that cannot be salary, that cannot be PGBP, so has to be IFOS. Did you understand this thing? What is keyman insurance amount? And when it is taxable under which head? If it is received by the person who has taken the policy, then on maturity, on death of the keyman, whatever time, if it is received by the person who has taken the policy, then it will be PGBP. But if it is received by the person on whose name the policy is taken, then on the name of the keyman, the policy was taken. If it is received by him, because the policy was assigned on his name, then either it will be for him, either it will be salary or it will be IFOS. If he is my employee, then it will be a salary, profit in lieu of salary. Or if he is not my employee, then IFOS. But what if he dies, policy was assigned on his name and he dies? Then the amount will not be received by me. It will be received by his legal heirs, nominees. Yes or no? In that case, for the nominees also, legal heirs also, the amount will be taxable under the head IFOS. Did you understand? Now, who has taken the policy? Who has taken the policy? Will X Limited have to pay the premium? That premium will be allowed as a deduction under the head PGBP. I have already told you. If I have taken the policy in the interest of my business, for my keyman, yes or no, who is very important for my business. So the policy was taken in the interest of my business. So on that policy, if I am paying the premium, I have paid the keyman insurance policy premium. So that premium will be allowed as a deduction as my business expense under the head PGBP. But wait, this premium is paid on the life insurance policy. Life insurance policy is a keyman insurance policy. And if that keyman is my employee, so can I say I am paying the life insurance premium for my employee? Will it be a perquisite in the hands of employee? The answer is no. Because that policy premium is not paid to give him personal benefit. That policy premium is paid for the benefit of my business or profession. So that amount of premium which I have paid on the keyman insurance policy, even though it is a premium on the life insurance policy, and even though the keyman is my employee, will not be treated as his perquisite under the head salary, because this amount I am not giving him in the form of personal benefit. I don't want to provide him any personal benefit, rather that policy was taken for the benefit of my business. That premium is paid for the benefit of my business. That premium is not paid to give him any personal benefit. Yes or no? Are you understanding? So premium paid by the company will be allowed as a deduction in the hands of company. But that premium, even if it is a life insurance premium, even if the keyman is my employee, that premium will not be treated as what? Perquisite in the hands of employee, in the hands of keyman. Understood? This is the end of keyman insurance policy. Now see the discussion. Can you see any sum received under the keyman insurance policy will be taxable under the head? If it is not taxable under the head, PGBP or, so first you will have to try that it gets taxable under the head PGBP. When it will be taxable under the head PGBP, when it will be taxable under the head salary, when it will be taxable under the head IFOS. I've already explained this entire thing. Okay. Now what is a Keyman insurance policy? Means a life insurance policy taken by a meaning X Limited on the life of another person, meaning Mr. Y, who is or was the employee of X Limited, first mentioned person, or is or was connected in any manner whatsoever with the business of such first mentioned person, and this life insurance policy is taken for Mr. Y. Another person is a very important person for my business as my employee, or is connected with my business in any manner, just like agent, etc. Yes or no? So what are the point? It is a Keyman insurance policy is a life insurance policy taken by on the life of, and the relationship between such person should either be that of employer-employee or any other business relationship. But the person for whom the policy is taken is known as Keyman. Keyman means an important person. Meaning you are an employee, but you are very important for my business. Meaning, if you are not my employee, but you are connected with the business of my company, you are connected with my business in whatever way, but still you are very important for my business. So I am taking your policy, taking your life insurance policy on your name, premium, etc. Everything I will pay, and the money, everything I will get. If I get the money, then PGBP. If you get the money, because the policy was assigned on your name, and you are my employee, then salary. But if you are not my employee, policy was assigned on your name, but if you are not my employee, then IFRS. And if you die, policy was assigned on your name. If you die, then the amount will be received by legal years will be IFRS. Understood? Now, this is tax treatment of premium paid on Keyman insurance policy in the hands of person taking the policy, X Limited, will be allowed as a deduction under PGBP head. Yes or no? And for Keyman, who was my employee, for him it will not be treated as perquisite, as it is not paid for the benefit of the Keyman. Understood? Everyone? Clause number 4 over. But with clause number 4, since we have discussed about what amount coming from life insurance policy, so let's talk about other amounts also coming from other life insurance policy. So see, what exactly I am going to do. 56 subsection 2 clause 4 talks about amount received on insurance policy. Yes or no? Amount received on, and that insurance policy is Keyman insurance policy. Yes or no? Now can I say in other cases also the amount is received on insurance policy? Tell me. Other insurance policies can also be there. On those insurance policies also the amount can be received. Which insurance policies can be there? Come on, tell me. I will try to cover each and every policy over here. Yes or no? So please be very careful in this discussion. Okay? Keyman insurance policy, clause 4 is done. So along with clause 4, I am doing some extra discussion with you, so that all the points are consolidated here at one place. Getting my point? So if the amount is received on insurance policy, what type of insurance policy? The insurance policy can be life insurance policy. Yes or no? Insurance policy can be medical insurance policy. Yes or no? Insurance policy is taken for policy for assets of business or profession, and that asset was what? Stock in trade in the business. That asset was used in business or profession, just like building, plant, machinery, furniture. Yes or no? And insurance amount received on insurance policy taken for capital assets, other assets. So can you get the amount from your life insurance policy? What will be the tax treatment? What will happen if you will pay the premium? Premium paid. What will be the tax treatment of the premium? After paying the premium, when you will receive the amount from the life insurance policy, what will be the tax treatment? Can you pay the premium of your medical insurance policy? Yes. So what will be the tax treatment of that premium paid? And what will happen when you will receive an amount from medical insurance policy? Can you pay the premium of your business assets, stock in trade, any other assets used in the business? And what will happen if you receive insurance claim on such policies? Yes or no? Can you pay the premium of your capital assets? Yes. What will be the tax treatment? And what will happen if insurance claim is received for such capital assets, for such policies? So one by one we are going to discuss about these points. Yes or no? So first discussion will be about medical insurance policy. Then it will be about policies taken for business assets. Yes or no? Then it will be about, and last discussion will be about very, very, very important. So just now tell me, simple thing I am asking, a simple thing. First, what type of insurance policy? Insurance policy was a key man insurance policy. Okay, no? Premium paid for such policy. What will be the tax treatment? And amount received from such policy. Amount received from such policy. Done, sir? So first effect, come on, you tell me. Keyman insurance policy. Premium paid. Premium paid. Is it an expense? Will it be allowed as a deduction under the head in the hands of the person who has taken that policy? Meaning in the hands of the business person. Yes or no? So premium will be allowed as deduction under the head PGBP, under which section? 37(1), general deduction, to the person who has taken such policy. Done, sir? Done, sir? Now pay attention. Amount received from Keyman insurance policy, tell me. If it is received by person taking the policy, then it can be your PGBP also, or it can be your income from salary also, or it can be taxable under the head IFRS also. Entire amount will be taxable. No exemption of that amount in any case. Understanding? Will always be taxable. So this is the end of Keyman insurance policy. Second amount, medical insurance policy. Which insurance policy? Tell me, what to do about the medical insurance policy? Will you pay the premium of your medical insurance policy? Is it an expense? Business expense, no? Then, but still you will get the deduction. You will not get the deduction under any of the heads. You will get the deduction under 80D from your GTI. So the medical insurance policy premium which you will pay will be allowed as a deduction, but under the section 80D from your GTI, subject to certain conditions that we are going to see in 80D. Yes or no? So medical insurance policy premium allowed as what? Deduction under section 80D from GTI. Subject to conditions. What are the conditions? How much will be allowed? That we are going to see in ATD. Now tell me, why do you take medical insurance policy? That God forbid, if you fall ill, if you fall sick, so doctor treatment will happen, medicines will be there, you will have to get yourself hospitalized, yes or no? So there will be a burden of medical treatment, medicines expense, yes or no? So that burden will be taken by insurance company. So insurance company, first you will incur that expense and insurance company will give you the reimbursement of those expenses. So are you getting amount from the insurance company? But that medical reimbursement is there, is not treated as your income, and the same is ignored. It is not treated as income under the Income Tax Act because it is a reimbursement of your medical expenses given by the insurance company. Understanding? If the insurance company is not giving you that amount, insurance company itself is incurring that amount, then also it is a benefit, but that benefit is not treated as your income, not taxable under the Income Tax Act. Will you remember this? So premium paid will be allowed as a deduction under ATD. But from medical insurance policy, if some amount is coming, that amount is not taxable as your income. That is not your income only. Ignore that amount. Will you remember? Next one. Then which policy? Policy for stock in trade of business. Can you take the policy for stock in trade of your business? Yes or no? Will you pay the premium? Premium is paid for the stock in trade of the business. Is it a business expense? Yes, it will be allowed under the head PGBP, under section 36 subsection 1 clause 1. And what if, God forbid, that stock is damaged, destroyed, then will you get the insurance claim? So the stock which will be lost will be your loss under the head PGBP, will be allowed as a deduction. Against that the insurance claim is received. So that insurance claim received on this policy will be deemed PGBP income under section 41(1). I have already told you all these things. So it will be your deemed PGBP income under section 41(1). Done, sir? Done, sir? Now you have taken policy for building, plant and machinery, furniture, which is used for your business or profession. What are you going to do for this? Will you pay the premium for this policy? Yes or no? This will be allowed as a deduction under the head PGBP. Under which section? If it was for building, it will be allowed under section 30. And if it was for plant machinery or furniture, it will be allowed under section 31. And what if that building, plant machinery, furniture is damaged or destroyed and the insurance claim is received? Then the amount of insurance claim received will be adjusted out of value of block of building, plant and machinery or furniture. Because if the building, plant, machinery, furniture for which you have taken the insurance, if that is damaged or destroyed, meaning it is going out of the block, deletions, and against that the insurance claim is coming. So that insurance claim, that insurance money from the insurance company will be adjusted out of the value of the block. To that extent, the deduction for depreciation will not be available. To that extent, the value will be decreased. These all things I have discussed, but consolidating at one place. Understanding? Next one. Now the policy for capital asset. Capital asset, your personal assets. Yes or no? These are not the assets used for the purpose of business or profession. So capital asset means your personal assets. Then, if you pay any premium for these assets, not allowed under the Income Tax Act. Nowhere under the entire Income Tax Act there is no deduction for this type of premium. So that premium you have paid, ignore that premium. For that premium you are not going to get any deduction. Understanding? But what if the asset for which you have taken the policy is damaged or destroyed due to N, R, F, E, and for this policy if you are going to get the amount from the insurance company, insurance claim, don't you think that it will be treated as full value of consideration under section 45 1A under the head capital gain, and based on that the capital gain will be calculated for this asset and will be liable to tax under the head capital gain. Yes or no? These all things you know. Now last thing, life insurance policy. Which policy? So policy is life insurance policy. What will be the premium? Can you pay the premium on life insurance policy? Is it your expense? But it will be allowed as a deduction under 80C from your GTI. It will be allowed as a deduction under section 80C from GTI. So life insurance policy premium is paid. Yes or no? That premium paid will be allowed as deduction under section 80C from your GTI. Understanding or not? But this will be allowed subject to conditions. How much allowed, when it will be allowed, that I am going to tell you in 80C. Don't worry. For whom the premium should be paid, all those things we are going to discuss in 80C. But right now just remember that the premium paid on this life insurance policy will be allowed as a deduction. But if this premium is paid by your employer, first it will be considered as your perquisite under the head salary, and then it will be allowed as a deduction under 80C. But if you are paying on your own, then you just claim as a deduction under 80C. Understanding? But if you are paying life insurance policy, why are you paying life insurance policy premium? So that you start getting some benefit from this policy. What type of benefit will be received? Can you get amount from the insurance company for your life insurance policy? What type of amounts you can get? Number one, you can get annuity. What you can get? Because the life insurance policy you had taken was an annuity policy. Now what is the benefit of this policy? Policy is a life insurance policy. It will cover the risk of death. Understanding? So if God forbid, you have taken a policy for 10 years. You have taken your life insurance policy for how many years? 10 years. God forbid, if you die, death benefit will be given to the nominee. That is confirmed. But what if you don't die? Policy will mature after 10 years. And after the maturity, you start getting a regular flow of income in the form of annuity. So this is as good as return on your investment. This will be taxable under the head IFOS. So from the life insurance policy, if annuity starts coming, what? Annuity starts coming, regular flow of income starts coming, pension starts coming, that is taxable under the head IFOS. That is return on your investment. Understanding? But what if you die within those 10 years? Will you get money? Or your nominees will get money? That is known as death benefit. That is known as, so now the insurance company will give a money to your nominees, to your legal heirs in the form of death benefit. On the death of the person whose policy was taken, the amount is paid to his nominees, his legal heirs, and that amount is a death benefit. fully exempt under section 1010D. D for death. 1010D. D for death. Without any condition, this will be fully exempt. You just have to submit a death certificate. That's it. To the insurance company. That see, this person whose insurance you have taken, no? This person has died. This is a death certificate. And I am a nominee of that person. See, my name will be written. This is my ID. So you just have to show your ID that you are a nominee of that person. Okay. And that person's policy was taken. Submit the death certificate. You will get what? Insurance amount. That is nothing but death benefit. Fully exempt. Fully. But sometimes no. Sometimes some policies don't give you a regular income. Sometimes some policies will give you lump sum on maturity. So whatever premiums you have been paying so far, no? All those premiums, including some bonus, you will get as maturity proceeds, lump sum proceeds. Yes or no? So that amount is lump sum. Lump sum maturity proceeds. Yes or no? This lump sum maturity proceeds is also exempt under section 1010D. But wait, this lump sum proceeds, if you want to exempt under section 1010D, there are certain conditions which you will have to satisfy. For example, you have taken a policy for 10 years. That is a life insurance policy. But life insurance policy is not an annuity policy now. Because if it was an annuity policy, on maturity you would have started getting what? Annuity. But now this policy is a life insurance policy, but it is an endowment policy. Which policy? Now in endowment policies what happened? That if within 10 years or 15 years, whatever is the tenure of your policy, yes or no, within that term of the policy, if you die, your family members, your nominees will definitely get what? Death benefit. That is fully exempt. Understanding? But what if you survive in that term? You had taken a policy for 10 years, no? So whatever premiums you have paid so far will come back to you, including some excess amount, bonus, etc. Yes or no? That is known as lump sum maturity. So it is as good as your investment. Yes or no? So that investment will give you some return? No, no return is coming. Your premiums which you are paying are coming back to you. So the premiums which you paid are coming back to you in the form of lump sum, should not be taxable. Some excess amount is coming, that also, okay, manageable. For these many years you have been paying premiums, yes or no? And those premiums are coming back to you with some extra amount, and that extra amount might not be a huge amount. It will be a very small amount, okay. So we don't want to charge tax on that, exempted. With this intention that lump sum was exempted. What? That in some policies, what happens when you keep on paying the premium, and if you don't die and you survive the entire policy term, then instead of your family members getting the death benefit, that insurance company returns back your premium along with some excess amount. Some excess, not too much, some excess amount they will give. But that ultimately, for these many years, you have been paying the premiums, For these many years, at least this some extra amount you deserve. And that some extra amount is coming in that lump sum, and the premiums for these many years coming back to you. Why to charge it to tax? Fully exempt. With this intention, the exemption is given. But the amount should be a genuine amount, no? All the premiums paid, coming back. And even if some extra amount is coming, that extra amount should not be too much. Yes or no? Thinking that we have given this exemption. But later on, when this exemption was given for the first time, after a few years, insurance companies and the persons taking the insurance, they started fooling us. Now they made these policies as investment avenues, giving great returns. Now people used to invest in the life insurance policies. Intention of the life insurance policy is not investment. Intention is covering the risk of the life. And to cover the risk of the life, whatever premiums you have given, those premiums are coming back to you since you don't die. Yes or no? You did not die. And that is coming with some extra amount. We are not going to charge tax. But what you have done, what you and insurance company have started doing, you have made it as an investment avenue to invest your money and get huge returns at the time of maturity. This is not something for which we started giving you exemption. And then huge amounts which you were earning as what? Returns on this policy on maturity, you started claiming it exempt, exempt, exempt. Understanding? So wait, maturity proceeds this. We will exempt. But we will exempt only if this comes in certain limits, no? Beyond those limits, if the maturity proceeds is coming, then it is, you are trying to earn returns by investing your money. So those returns, how can we leave them? How can we exempt them? Those returns we will tax. In that case, your maturity proceeds will not be exempt. So wait, we are going to tell you that when your maturity proceeds will be exempt. So if you want that your maturity proceeds from the life insurance policy be exempt, do one thing. The annual premium. What did I say? Annual premium on the policy should be less than or equal to 20% of capital sum assured. If the policy matured is a policy which was issued between 1st April 2003 to 31st March 2012. So if the policy which is getting matured now was a policy which was issued between 1st April 2003 to 31st March 2012, and from this policy if you are going to get maturity proceeds, those maturity proceeds we will exempt, provided all the annual premiums of that policy was this much or less. How much? 20% of the capital sum assured or less. So now we will check what was the capital sum assured on that policy. Capital sum assured means minimum amount, guaranteed amount on that policy by the insurance company. So for example, if you are taking a policy of 10 lakhs, so what is the minimum guaranteed amount? 10 lakhs. If you die, your family members will get 10 lakh, or if the policy will mature, guaranteed you are going to get 10 lakhs. Sometimes that amount is higher, sometimes no. Most of the times this amount is higher. The 10 lakh is a guaranteed amount, but with this policy you get bonus also, some extra amount also you get. But the guaranteed amount is capital sum assured. So what is the capital sum assured? 10 lakhs, no? So 20% of that. Every year annual premium on that policy should be 2 lakh or less. Then only on this policy your maturity proceeds will be exempted. But what if the policy was taken between 1st April 2012 to 31st March 2013? For these policies, the maximum annual premium should not be more than 10% of capital sum assured. 20% was a huge limit. No, we have reduced this limit to 10%. But if the policy is issued on or after 1st April 2013, then also it is 10% of capital sum assured for normal person if the policy was taken for normal person, but if the policy was taken for handicaps, then 15% of capital sum assured. For person, policy was taken for a person who is a handicap or suffering from a disease. Suffering from disability under section 80U, or suffering from disease under section 80 DDB. So if the person for whom the policy is taken is a person who is a handicap or a person having a specified type of disease, for that person if the policy was taken on or after 1st April 2013, then for that person the annual premium policy of that person, on that policy the annual premium should not be more than 15%. For normal persons it is still 10% only. Yes or no? Hello? So if the policies are taken between this period, policy is taken in this period, then annual premiums on that policy, yearly premium of those policies should not be more than the limit given. Only then the maturity proceeds of such policies will be exempt under section 1010D. This much return we allow, but a return beyond this we will not exempt under 1010D. What if the premium for any year is more than this limit? Even for a single year the premium was more than this limit, then the maturity proceeds of the policy will not be exempt. So are you getting maturity proceeds from insurance policy? Fully exempt under section 1010D, provided the annual premiums on this policy you have paid so far every year is within the limit. Understanding? Yes or no? What if the policy was taken in 15-16? Policy was taken in 15-16 and that policy is getting matured in 25-26. So this year a policy is matured. How much amount you are getting from that policy? Example, you are getting 13 lakh rupees from the policy. So this year, this is your previous year, 25-26. In this year, you are getting what? Maturity proceeds of life insurance policy. How much maturity proceeds you are receiving? How much? 13 lakh rupees of maturity proceeds you are receiving of a life insurance policy whose capital sum assured was how much? 10 lakh. This life insurance policy was taken in 2015-16, and on this life insurance policy the annual premiums you have been paying how much premium? Example, you have been paying 1.15 lakhs, 1,15,000. So every year how much premium you are paying? 1,15,000, 1,15,000, 1,15,000, 1,15,000. And after few years, and the policy is term, capital sum assured was 10 lakh, term of the policy was 10 years, yes or no? And every year you have been paying how much premium? 1,15,000, 1,15,000, 1,15,000. And after 10 years, this year the policy is getting expired. Tell me yes or no? Matured. And on maturity you are getting how much? 13 lakhs. So there was a life insurance policy which you took, which was issued to you in which year? 15-16. 15-16 meaning when? This case, or this case? Last case. Because the policy is issued on or after 1st April 13. In which year? 15-16. So how much should be the maximum premium on this policy every year? If this policy was taken for a person suffering from disability specified under section 80U, suffering from a disease specified under section 80 DDB, for that person if the policy is there, then 15%. But it is not given then. The policy was taken for a normal person. Then the premium should be 10%. Yes or no? So 10% of what? Capital sum assured. 15% of what? Capital sum assured. So what is the capital sum assured on the policy? Minimum guaranteed amount was 10 lakhs. So 10% of that will be? Every year the premium should be 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. Yes or no? But how much premium you have paid? Have you paid the premium more than the prescribed limit? Then the maturity proceeds will be exempt under section 1010D or will not be exempt? So it will be, full amount will not be taxable. Out of this, the premiums which have come back will not be taxable. So reduce the premiums which are coming back. The premiums which you paid coming back, reduce that amount. But don't reduce that premium which we have already allowed under ATC. Because out of this premium, every year the premium will be claimed under section ATC also, no? That premium we are not going to allow. So for example, every year you were paying how much premium? An entire 1,15,000 was allowed under section. So every year the premiums which you were paying, we were allowing that premium, no? We will not allow that premium to be reduced. Understand? So every year, how much premium you were paying? But out of that premium, only 1 lakh was allowed under section ATC. Because for ATC also the same limit is there. Every year, how much premium you can pay? Within this limit, only this premium every year will be allowed as a deduction under ATC. So how much premium you were paying every year? 1,15,000, 1,15,000, 1,15,000. Out of that, how much premium was allowed under section ATC? 1 lakh, 1 lakh, 1 lakh. Within the limit only the premium will be allowed under ATC. Yes or no? And how much premium was not allowed every year? 15,000. So the premium which is not allowed every year coming back to you, that you reduce. Yes or no? But the premium which we have already allowed under section ATC coming back to you will not be reduced. So tell me, how much amount you have received? 13 lakhs. This 13 lakh is nothing but your premiums are coming back. So reduce those premium, but don't reduce that premium which we have already allowed. So which premium you will reduce? 15,000. Into how many years? 10 years. So 1,50,000 out of 13 lakh minus. So how much is remaining? Now that amount will be treated as your income under the head IFOS as per clause 13. As per clause 12. As per clause, that maturity proceeds will now be taxable under clause 12. Understanding? So what I am trying to tell you, maturity proceeds, what did I say? Please pay attention. The maturity proceeds from what? From life insurance policy. And this maturity proceeds which is coming from life insurance policy was exempt or was not exempt? Was not exempt under section. Was not exempt under section 1010D. So this maturity proceeds will be taxable as your income under the head IFRS, but this entire amount will not be taxable. Out of this, some amount will be reduced. How much amount will be reduced? The amount of premium coming back to you in maturity proceeds will be reduced, but that premium will be only that premium which was not allowed under the provisions of Income Tax Act. Yes or no? So out of this maturity proceeds, you are going to reduce what? Premiums paid during the term of the policy. 10 years term, 15 years term, whatever is the term of the policy. Yes or no? Not allowed as deduction under the Income Tax Act. That premium which was not allowed as a deduction. So those premiums are also coming back to you, no, in the maturity proceeds. So the premiums which we did not allow, those premiums are also coming back. We will not charge that premium, reduce that premium. But the premiums which we already allowed coming back to you will be taxable. Any amount over and above that will be taxable. So out of the maturity proceeds, if you reduce this much premium, this we are not going to tax, but whatever balance is there, that entire amount will now be treated as your IFOS income. Understanding? So after reducing this amount, what did I say? After reducing this amount, the balance amount, balance maturity proceeds will now be taxable as your income. Taxable as your income under the head IFOS as per section 56 subsection 2 clause 12. One more clause done. Last clause is already covered. Understanding or not? But remember, if the policy is taken between this period, what was the premium? Maximum premium you can pay every year is 20%. If the policy was taken within this period, then 10%. No need to bifurcate whether the person for whom the policy is taken is normal or handicapped. No need to bifurcate here. Yes or no? But if you'll start bifurcating if the policy is taken on or after 1st April 13. For normal persons the policy is taken, then 10%. For persons suffering with disability or suffering from specified diseases, for those persons if the policy was taken, then 15%. Yes or no? So this is not a monetary limit. This is a percentage limit. Now within this percentage, any amount can be paid. If the policy was taken for 10 crores. So 10 crores is not a small amount. What if the policy is taken for 10 crores? And the policy was taken on or after 1st April 2013. How much should be the premium? 1 crore. Maximum 1 crore. Yes or no? Or for handicaps, if the policy was taken, then maximum 1.5 crores. Now for example, there is an insurance company and you are a high net worth individual. You are not a small person. You have lakhs and lakhs, crores and crores of rupees with you. Still you were taking the benefit of this investment. Now you are making an investment within the percentage limit, but since the quantum was huge, so even if the small returns are coming, within the limits also coming, but those small returns in amount terms was huge. A small policy you are taking, small policy, small premium you are taking, so the returns coming in terms of amounts are also less. That we can exempt. So premium paid within the limit. Policy amount is also small. The returns are also coming very small in terms of amount. But what if huge sums are involved? Policy taken for 10 crores. How much? Insurance company told you that take a policy of 10 crore from us. Every year premium, how much we will charge? 95 lakh rupees. How much? For 10 years. So if you will take a 10 years policy from us, policy worth 10 crores, yes or no? Or just forget about 10 crores. Take a policy of only 1 crore. If you will take a policy of 1 crore for 10 years, every year premium we will charge 9 lakh 50. Every year premium we will charge. So understand this thing. Now what is the capital sum assured? Tell me. Capital sum assured is 1 crore. Take a policy of 1 crore. Okay, no? Policy's term will be 10 years. Okay. And what will be the premium which you are supposed to pay? 9 lakh 50,000. Can I say 9 lakh 50,000 is within the limit of 10%? So this 9 lakh 50 you have to pay for how many years? Pay for 10 years. In 10 years, how much amount you have given to the insurance company? 95 lakhs. The maturity proceeds which the insurance company will give you will be 1 crore 15 lakhs, including bonus. 1 crore 15, no, 1 crore 8 lakhs. Tell me how much premiums you have paid so far? 95 lakhs premiums. Over and above 95 lakhs, how much you are getting? Over and above 95 lakhs, how much you are getting? 13 lakhs. Is it a small return? Or 13 lakh a big return? Now what if that same policy was taken for 5 crores. How much? 5 crores. Getting my point? Policy was taken for 10 years. For example, every year premium is 49 lakh 50,000. Every year premium is 49 lakh 50,000. Okay, no? And on maturity, you are going to get 5 crore 30 lakhs. So in 10 years, how much premium you are going to pay? 4 crore 95 lakhs. Over and above that, how much extra you are getting? Return? Small amount or a big amount? Now see, this much return you are earning just by keeping a life insurance policy. Now in terms of absolute monetary terms, no, now the returns have started growing. So people, high net worth individuals started doing this. Bloody, if you'll keep that 5 crore in the bank for 10 years, you are going to get how much return? How much return you got? 30? That return would have come for 10 years on your bank FD. You would have paid tax on that or not? You are not paying tax on this. Why? Because now that entire amount is coming as maturity proceeds. So this will be a part of your maturity proceeds. And since the yearly premiums are within the limit, entire amount will be exempt. So in that entire amount, this return is also getting exempted. This return is not a small return. This is a huge return. And in the hands of those high net worth individuals, these huge returns are getting exempted. It was pinching the government. So in the year 2023, one more amendment came. And now, any policy, what did I say? Which is issued on or after? On or 1st April 2023. Any policy which is issued on or after 1st April 2023. On that policy, maximum premium should not be more than 10% of capital sum assured for normal persons. Yes or no? Or 15% less than equal to 15% of what? Capital sum assured for a disabled person. Yes or no? Handicap, etc. I am writing handicap person. And see, premium should be within the percentage limit. That is the first requirement. And now one more requirement is there. And the annual premium in terms of limit should also be 5 lakh rupees or less. On all those big policies having an annual premium of more than 5 lakhs, the returns were huge, even though the returns were limited returns, but in terms of money, the returns were huge. We don't want to exempt those returns. So for that, we are putting a monetary limit also on what? On the premium. So first of all, the premium should not be more than the percentage limit, as well as the premium which you have paid on that policy should not be more than 5 lakh also. Understanding? So now tell me, for this policy, how much is the premium? Within 10% only, no? So maximum premium should be how much? Maximum premium on this policy should be 10 lakhs. Yes or no? Are you paying the premium within the limit? Yes or no? So this was exempt, no? Entire maturity proceeds used to be exempt. And in that maturity proceeds, how much was your return? 95 lakhs. Over and above that, how much was your returns? That entire 13 lakh used to get exempted. Will not be exempt anymore. Because you are not going to get 1010D exemption for this policy. Why? Because even if the premium of the policy is within the limit of 10%, but still since the amount is more than 5 lakhs, the maturity proceeds will not be exempt. Now the maturity proceeds will be taxable. But wait. Out of this maturity proceeds of 1 crore, 8 lakh, we will reduce the premiums paid for term of the policy, which we did not allow under the Income Tax Act. So out of the total maturity proceeds, the premiums which are coming back to you will be reduced. But those premiums which we did not allow under Income Tax Act, those premiums we will reduce and the balance will be taxable. Yes or no? So every year, how much premium you are paying? How much premium you are paying? So out of that 1,50,000 was allowed under ATC. How much was allowed under section ATC? 1,50,000. So how much was not allowed? 8 lakhs. So 8 lakh into 10. 8 lakh into 10, 80 lakhs. So out of 1 crore 80 lakh, how much premium which we did not allow? 80 lakhs. Reduce that. How much is the balance? 28 lakhs. 28, no? That will be taxable as your income from other sources. Understanding? For second policy, please do the needful. Just a second. Now tell me, second policy, can you see? How much is the capital sum assured? 5 crores. Okay, on the first policy, did you understand, no? Now why did I do that? See, The policy was taken on issue. Issue date of policy is important now. Policy is issued on or after. On or after 1st April. 1st April 2023. Only then you are going to see that the premium should be within the percentage limit also, and premium should be in the limit of 5 lakhs also. Yes or no? But if the policies were issued prior to this, prior to 1st April 2023, then only check percentage limit. Don't apply 5 lakh rupees of monetary limit, because that time there was no monetary limit. For example, this policy was taken in 2015-16. Then sir, this maturity proceeds now. Maturity proceeds exempt under section 1010D. Fully exempt. Why? Sir, yearly premium is within the range of 10%. Yearly premium is within the range of, and there was no maximum monetary limit at that time. Understanding? So entire 1 crore 8 lakh will be fully exempt whenever it will be received. Yes or no? But now tell me, if this 5 crore rupees of policy was taken in the previous year 24-25, can I say the policy is taken on or after 1st April 23? Yes or no? So how much should be the maximum premium on this policy? Maximum premium should be 50 lakhs. 5 crore into 10%. 50 lakhs. This is the percentage limit. But you have to see that monetary limit also now. The premium should not be more than 5 lakhs. So the premium paid by you is within the 10% of limit. But is it more than 5 lakhs? Yes. So it is more than 5 lakhs limit. Hence maturity proceeds will not be exempt under section 1010D. So now what are you going to do? You will take the entire maturity proceeds of 5 crores 30 lakhs. Yes or no? Out of that you will reduce the premiums coming back to you. But you will reduce that premium which was not allowed under the Income Tax Act. So every year how much premium you are paying? 49 lakh 50. 49 lakh. But every year you are claiming a deduction of 150. So how much premium was not allowed every year? 48 lakhs. So out of 4950, how much was allowed? 1 lakh 50. So how much was not allowed? 48. 150 allowed, 48 disallowed. 150 allowed, 48 disallowed. 150 allowed, 48 disallowed. So how much was not allowed every year? 48 lakhs multiplied by 10. 4 crore 80 lakhs. Yes or no? So how much is the balance amount? How much? That entire 50 lakhs will now be treated as your income from other sources. Now see, some people are very smart. Even after putting this type of limits, no, some people are very smart. What they will do? For example, I am a person. I know that the policy will be issued on or after 1st April 2023. Okay. Now what is the capital sum of assured? I want to take a policy of 1 crore. I want to take a policy of 1 crore. This exact same thing. Okay, no? For a term of how many years? 10 years. Okay. And the premium every year I will pay how much? Premium every year I will pay 9 lakh 50. Okay. And maturity proceeds I will get 1 crore 8 lakhs. Yes or no? And okay. Now see, if I want to take this 1 crore rupees of policy, and since I am taking the policy on or after 1st April 2023, what will happen? Maximum premium which I can pay is how much? 10% and some monetary limit also. monetary limit and this 10% limit. Yes or no? So if I say 10% limit, then how much should be my premium? 10% limit? 10 lakhs. But the monetary limit is 5 lakhs. Done, sir? So tell me, every year, am I satisfying this monetary, this limit of 10 lakh? Yes, because see, the premium is 9 lakh 50. But am I satisfying this 5 lakh rupees of limit? No, because the premium is more than 5 lakhs. So whenever in future I will receive the maturity proceeds, will this maturity proceeds be exempt in my hands? Will this maturity proceeds be exempt in my hands? No. So I very well know that if now I will take this policy, the premium, even though I pay the premium within the limits, and I will on the maturity proceeds, now the maturity proceeds will not be exempt. So returns which I used to earn on such type of policy, by investing in such type of policies, those returns will no more be exempt. What to do, what to do, what to do? Who has said that I have to take one policy of 1 crore? Can I take 5 policies of 20 lakhs? Can I take 4 policies of 25 lakhs? This entire 1 crore I will split into 4 policies. Simple. So instead of all the policies, I will issue what? On or after 1st April 2023. Now every policy will be of 25 lakhs. Policies will be for 10 years. And 9 lakh 50 divided by 4. 9 lakh 50 divided by 4. 237. And 1 crore 8 lakh divided by 4. 27 lakhs. 20. Getting my point? Now see, 25 lakhs into 4 policies I will take. So I will tell the insurance company, or the insurance company will give me an idea that, sir, who has told you to take one policy? If you will take one policy of 1 crore, what will happen? Sir, premium will be within the percentage limit, but premium will go above that monetary limit because the government has fixed the limit of 5 lakh rupees premium on the policy. We have thought some idea about you. Insurance company will come up with this idea because they want to sell their policies, no? And even some intelligent people like me who will be thinking about that, okay, for one policy you have taken, who has told that I can take one policy? That single policy, I will split into 4 policies. Instead of me having one policy on my name, now I will have 4 policies on my name. And every policy, 25, 25, 25, 10 years, 10 years, 10 years, hello, then 237,500, 237,500, 237,500, 237,500, and every policy I will get 27, 27, 27. Getting my point? Now, tell me, what should be the 10% limit? 2,50,000. Yes or no? And what is the monetary limit fixed? 5 lakh. Now tell me, is the premium paid within the 10% limit? And the premium paid is within the monetary limit also. For all the 4 policies. Maturity proceeds 27, 27, 27, 27, 27. Fully exempt, fully exempt, fully exempt, fully exempt. So bloody, what is the point of, bringing this amendment? What is the point of putting that limit of 5 lakhs? The assessees will start doing this now. So hence they have said this limit. What did I say? This limit of 5 lakh is aggregate limit, aggregate premium on all such policies. What did I say? Now if you will take the 4 policies, the aggregate premium will go more than 5 lakhs, no? So for all the 4 policies, exemption will not be available. Exemption will be available for first policy, second policy, both of them taken together, 237,500, 237,500 is not more than 5 lakhs. And the 10% limit is also there. For any two policies, you can claim the exemption. Understanding? Because for those two policies, the aggregate premium taken together is not more than 5 lakhs. And the individual premium on those policies is also not more than 10%. Hence, the entire maturity proceeds on those two policies will be exempt. And for the other two policies, it will be fully taxable. Taxable meaning after reducing the premium coming back, which was not allowed as a deduction. Whatever balance maturity proceeds for both remaining two policies will be taxable. Understanding or not? Now tell me, I'll tell you one thing. Okay. Now see, the same thing, same thing. This entire thing I am doing again. Okay. Copy and then paste. I want to take a policy for how much? 1 crore, no? So policy issued on or after. On or just issued. Wait. Issued on. Okay. Now I will give you few policies. You are going to tell me for which policies exemption will be available, for which policies exemption will not be available. I am giving you 5 cases. Okay. Done, sir. Okay, capital sum assured 50 lakhs. Here it is 40 lakhs. Here it is 30 lakhs. Here it is 40 lakhs. And here it is 20 lakhs. Done, sir? 50, 40, 30, 40, 20. Okay, term of the policy for every policy, let us take 10 years term. Okay. How much term? 10 years. Premium for this policy was 6 lakhs. And on maturity, you were supposed to get 71 lakhs. Here the premium was 3 lakh 90,000, and on maturity you were supposed to get 43 lakhs. 43 no, 46 lakhs. Okay, sir. And for this policy, the premium was 3 lakhs. This policy, the premium was 4,10,000. For this policy, the premium was 1,90,000. And the maturity proceeds here was 35 lakhs. Here it is 48 lakhs. Here it is 23 lakh 40,000. 23 lakh 40,000. Okay. So now tell me for which policies you will get the exemption. First of all, this maximum limit of 10% is applicable. Here the maximum monetary limit will not be applicable for first two policies. Why? Because the policies are issued prior to, yes or no? So for these two policies, for this first policy and second policy, the monetary limit of 5 lakh will not be available. Okay, so you just have to take percentage limit, no? So how much is the percentage limit? Tell me. Percentage limit 5 lakhs. 10%. 10% of 50 lakhs will be 5 lakhs. And 10% of 4 lakhs will be 40 lakhs will be 4 lakhs. Yes or no? And we are assuming that the policy was not taken for handicap. Yes or no? Hence we are taking 10%. If they have told that the policy is taken for, then instead of 10% we are going to take 15%. Okay. Next one. Now tell me, will the maturity proceeds be exempt? Exempt? Sure. 100%. Don't you think you will get a tight slap on your face? Bloody. How much is the premium which you should pay? And how much you are paying? So premium is paid within that percentage limit. Within the limit, no? Or more than that? So in this case, the maturity proceeds will be exempt or will not be exempt? 71 lakhs maturity proceeds not exempt under section 1010D. Now out of this, whatever premium which was not allowed earlier will be reduced. So for example, every year out of 6 lakh, 1 lakh 50 was allowed. How much was allowed? And remaining 4 lakh 50 was not, sorry, yes, 4 lakh 50 was not allowed. 450 not allowed, 1 lakh 50 allowed. 450 not allowed, 150 allowed. Every year, yes or no? So whatever premium which was not allowed, how much? 450 multiplied by 10. How much? Minus 45 lakhs. If the policy was for 15 years, then for 15 years the premium would have been paid. Why I am taking 10 years? Because the term is 10 years. If the policy term was 5 years, then for 5 years whatever premiums were not allowed. Yes or no? Reduce that. How much? This 26 lakh will be treated as your income from other sources. Understanding? Now tell me, second case. How much should be the yearly premium? How much premium you are actually paying? Within the limit, entire 46 lakhs will be exempt. So this 46 lakh which you are receiving on this policy, 46 lakh which you are receiving on this policy will be fully exempt under section 1010D. Nothing will be taxable. Understood? Now coming to the last 3 policies, 1, 2 and 3. Please be careful. Okay. All these policies are taken on or after 1st April 2023. Yes or no? Now on all these policies, you have to check percentage limit also, monetary limit also. Okay. So first of all tell me, percentage limit for the first policy 30 lakh into 10% should be 3 lakhs. Very good. And the monetary limit is 5 lakhs. Second policy, come on, tell me second policy. Percentage limit is 4 lakhs and monetary limit is 5 lakhs. Third policy, percentage limit is 2 lakhs. Yes or no? And the monetary limit is 5 lakhs. Understood everyone? Now check. 3 lakh. 3 lakh. Which is less than 5 lakhs also, no? It is less than 5 lakhs. So this proceeds can be exempt under section 1010D. This can be exempt. Will be exempt or will not be exempt, that we are going to see. But this can be exempt. Yes or no? Now tell me, can I say 4 lakh and 5 lakh? Even though the premium paid is less than 5 lakh within the monetary limit, but since it is more than the percentage limit, this is not satisfied, this is satisfied. Understanding? So even though the premium paid is within 5 lakh rupees monetary limit, but since it is more than 10%, for this policy 1010D exemption will not be available. So can I say this entire 48 lakhs will be taxable. So for this policy, can I say for this policy exemption can be taken, for this policy exemption cannot be taken. Okay? Hello? So I will write what? 48 lakhs over here. Hello sir? Out of that 48 lakhs, I will reduce. For this 1010D exemption cannot be taken. Done, sir? 1010D exemption cannot be taken. So from here, I will reduce what? The premiums paid, which were not allowed. For example, every year I was claiming 1,50,000, 1,50,000, 1,50,000. So how much was not allowed? 2,60,000, 2,60,000 was not allowed. 2,60,000 into 10. How much? 26 lakh you reduce. How much? 22 lakhs will be taxable as your income from other sources. For this policy, this amount will be taxable. Okay. Now tell me, last policy. How much is the premium? 1,90,000. How much is the premium? 1,90,000, which is less than 2 lakh, and this is less than 5 lakhs also, no? Yes or no? So this policy maturity process 23 lakh 40,000 will also be exempt. Color, green color. Color, green color. Can I say I can claim the exemption for this also under 1010D, and I can claim the exemption of this also under 1010D? Yes or no? Will I be able to claim the exemption for both? Yes, because the percentage limit is also matched. And if I add both the premiums, can I say 3 lakh plus 1,90,000 aggregate premium is also within the limit of 5 lakhs. Understood or not? So 3 lakh plus 1,90,000, 4,90,000, which is less than 5 lakhs. So aggregate limit of 5 lakh. And also the individual premiums are within the limit of 10%. Hence, for this also exemption can be claimed, and for this also exemption can be claimed. But wait. If the last policy was the amount of the last policy, example, if the amount of last policy was 30 lakhs, how much? Okay. And on that also, the premium would have been 3 lakhs. And on that also, I would have paid what? I would have received 35 lakhs. Yes or no? Now tell me, annual premium within the percentage limit and monetary limit. Annual premium within the percentage limit and monetary limit, because here also the percentage limit will be 3 lakhs. Yes or no? So annual premium is within the percentage limit and monetary limit. Individually both are eligible. Yes or no? But if you add both of them, the total premium is 3 plus 3. 6. You cannot take both the exemptions. You will have to lose one and you will have to take one. Understood? But here you can take both. Why? Because aggregate premium on such policies is within the limit of 5 lakhs. Understood? This is the end of your insurance policies. Everything we have covered at one place. Okay, no? Everything we have covered at one place. So now pay attention. See here. Tax treatment of amount received under other insurance policies. Amount received under life insurance policy. The premium on that will be allowed under section 80C. But if from the life insurance policy annuity is received, that will be taxable under IFRS. Death benefit is received, including bonus if any, will be fully exempt in the hands of the nominees, in the hands of the legal heirs. Yes or no? And if the policy gets matured, on maturity, the amount is coming, that is also fully exempt. But if you want to claim this maturity proceeds as exempt, you have to pay the premiums within this limit. If the policies are taken within this period. Yes or no? This everything we have seen. But wait. Maturity proceeds, including bonus if any, on the life insurance policies issued on or after 1st April 2023 shall not be under section if the amount of annual premium or aggregate amount of annual premiums on such policies exceed. So if you want to claim the exemption, first of all, the annual premium should be within the limit of percentage individually. And aggregate premium on all such policies taken together should not be more than 5 lakhs. Hence the maturity proceeds of such insurance policies shall be exempt only if annual premiums paid thereon is up to 10% or 50% of capital sum assured and up to 5 lakhs in aggregate. Understanding? Now there are few examples which are given in your ICI study mat for this. You are going to See that those examples today at home, huh? Okay. Now see, this is clause number 13. No, this is wrong, huh? This is clause number 12. My mistake in writing here. This is clause number 12, guys. Okay, this is clause number 12. None, sir. Even if you don't remember the clause, no, just write 56 subsection 2. That is more than enough. Okay. Now see, any sum. What did I say? Any sum received, including bonus if any, under a life insurance policy, other than the sum received under ULIP or Keyman insurance. See, sum received under ULIP is taxable under the head capital gain. Will not be taxable under the head IFRS. And Keyman insurance policy amount is separately taxed under clause number 4, or it will be taxable under PGBP, or it will be taxable under the head salary. So we are not talking about these two sums, because these two sums coming from the life insurance policy already taxed under the head capital gains or under the head PGBP, salary or IFOS separately. So we are not talking about these amounts coming from life insurance policy. We are talking about other sums from your normal life insurance policy coming as maturity proceeds, and that amount is not exempt under section 1010D. So that amount will also be treated as your income minus the premiums which are paid during the term of that policy, which was not allowed as a deduction under Income Tax Act. After reducing that amount, whatever balance is remaining, that will be taxable as your income. This, we have done the calculation also for this. Understanding? Hello, sir? Okay. Now see, medical insurance policy, premium paid, allowed as a deduction. What if the amount is received? Not an income. Not an income. Ignore that amount. What if the policy was taken for stock in trade or your trading assets? Premium on that policy is allowed under PGBP. Yes or no? But if you receive any amount from the insurance company for damage or destruction of these items, then it will be treated as your deemed PGBP income. Yes or no? And if you are taking the policy for any of the assets used for business or profession, which are forming part of your block, yes or no? Building, plant machinery, furniture, which are used for the purpose of your business or profession, on that policy, whatever premium you are paying will be allowed as a deduction under PGBP, section 30 or 31. But if those assets are damaged or destroyed and you are receiving insurance claim for that, then that will be taxable under the head PGBP. No. That will be directly adjusted from the value of the block as what? Deletion. Done, sir. What if you have taken the insurance policy of your capital asset? Will you pay the premium? Yes. That is your personal expense, is not allowed as a deduction under any of the provisions of Income Tax Act. The premium is not allowed as a deduction. But wait, if that capital asset is damaged or destroyed and now you are receiving insurance policy amount, then that insurance policy amount will be treated as full value of consideration to calculate your capital gain under section 45(1)(a). Entire thing we have discussed. Done, sir? Clause number 9. We have done in so much detail these items. Advance money received and forfeited on or after 1st April 2014 will be taxable here. Okay, no? Then clause number 10. Now this is an important clause. Gift. How many cases? 5 cases. Now in any of these 5 cases, you are receiving what? Gift. Whatever you are receiving in these 5 cases will be treated as your gift. Understanding or not? So, before doing this gift provisions, take a break. Yes, today I am giving you an early break so that I don't want to break the rhythm in between, because after gift, I want to connect the gift provision with capital gain. So if I will start doing it, it will take unnecessary time and your lunch break will be extended, which I don't want to do. Okay, and I don't want to break this discussion in between. So take a early break today, 1 hour break, and we'll meet at after 1 hour, and then I'll do the I'll continue from here. Okay, so pay attention. See what I'm telling you. After the break, no, the moment gift provisions are over, almost the entire discussion of the chapter is over. Gift provisions are very easy provisions, but for that you need to think sometimes from the point of view of capital gains, sometimes from the point of view of IFOS, sometimes from the point of view of capital gain, and sometimes IFOS. And for that I would require your attention. So after the break and in continuation, if we'll do no, what will happen? You will be able to correlate those points which I want to connect here. And there is one important discussion of 49 subsection 4, which I left in capital gain, that I'm going to do here when I'll link up those provisions of capital gain and gift. Okay. So see you in 1 hour and we are meeting and then we are continuing from here and we'll finish this chapter. Okay. All the questions also we are going to finish, and tomorrow we are going to finish 2 chapters, clubbing and set off. Both the chapters are very small, will be finished tomorrow itself. Okay. So see you in 1 hour.